Welcome back, ladies and gentlemen. Here is the question for the day. This question is asked by Mr. Prakash Gholia, Uday Instruments. He's a partner. They are manufacturers of specialty wires, cables, and tubes for medical devices, pharma, and food industry. Ladies and gentlemen, his question is, for MSMEs, is restructuring and capital or debt available to partners if the unit is an NPA? And here is my answer, ladies and gentlemen. As a part of the restructuring package after the COVID broke out, the government of India announced 20 lakh crore package, of which majority of the share went to the MSMEs. You are aware of this already. The 3 lakh crore package was one of them. However, there is a very special package which only few MSMEs are truly aware of, that was also launched at the same time. And that was a rupees 20,000 crore subordinate debt for stressed MSMEs. The rationale was that the stressed MSMEs need equity support. They need to infuse equity, but the partners don't have the funds. Government of India will facilitate provision of rupees 20,000 crore as subordinate debt. 2 lakh MSMEs are likely to benefit, declared Nirmala Sitharaman while presenting the scheme. Functioning MSMEs, and not the ones which are closed. Functioning MSMEs which are NPAs or are stressed will be eligible. Government will provide a support of certain amount to cgtmse. cgtmse will provide partial credit guarantee support to banks. The promoters of MSME will be given debt by the banks, which then they will infuse as equity into the unit. So this is what was announced. The scheme is named as Distressed Assets Fund, Subordinate Debt for Stressed MSMEs. And the credit product for which the guarantee would be provided under the scheme shall be named as a Credit Guarantee Scheme for Subordinate Debt, that is cgssd. We will refer to it as the scheme. The purpose of the scheme is to provide guarantee coverage for cgssd to provide subdebt support in respect of restructuring of MSMEs. 90% guarantee coverage would come from the scheme or the trust, and the remaining 10% has to come from the concerned promoters. The objective of the scheme is to provide personal loan to the promoters through banks. Now let us come to how much could be the eligible amount. So the circulars issued say that the credit facility means financial assistance provided under the scheme by way of subdebt facility extended by the lending institutions to the promoters of MSME units up to 15% of promoters' stake, or rupees 75 lakhs, whichever is lower. Now, who is an eligible borrower? So it has been defined that eligible borrower means the promoters of MSME units which are stressed. That means either they have been classified as SMA2 and NPA accounts as on 30th of April 2020. And can become commercially viable as per the assessment of the lending institutions. Which means the lending institution must believe and the promoters must give them confidence that the business is still viable. All it requires is restructuring. It has been said that who are the eligible borrowers? Scheme is applicable for those MSMEs whose accounts have been standard as on 31/3/2018 and have been in regular operation either as standard accounts or as NP accounts during the financial year 18-19 and the financial year 19-20. The MSME itself may be proprietorship, partnership, private limited company or registered company, etc. In cases where recovery proceedings are already underway and the banks assess that with the facilities provided under the scheme, the account would become viable again, then the banks shall withdraw the recovery proceedings before going ahead with restructuring. So if the banks are willing to support you and if you can give them the confidence, as per this circular, the banks have the powers to even withdraw the recovery proceedings and allow the restructuring of the unit to happen. Who can provide the funds under the scheme? Lending institutions or member lending institution or MLIs are defined as scheduled commercial banks for the time being, included in the second schedule to Reserve Bank of India Act. So which means NBFCs currently are not permitted to offer this particular restructuring facility. What shall be the primary security for this credit facility? The primary security in respect of a credit facility shall mean the assets created out of the credit facility so extended and or existing unencumbered assets which are directly associated with the projected business for which the credit facility has been or was extended. In case you have existing limits with more than one lender, the cgssd can be availed by you through one lender only. Till when can the application be made for this subdebt scheme? The application can be made before 31st of March 2021 or until the limit of rupees 20,000 crores, which is the total corpus of the scheme, is exhausted. So the sooner you apply, the better. What will be the maximum tenure for the repayment? The maximum tenure for repayment will be 10 years. There will be a moratorium of 7 years maximum on the payment of principal. That's huge. Up to 7 years, you need not repay the principal amount. You only have to pay the interest. The interest has to be serviced regularly, that is monthly. And the principal shall have to be repaid within a maximum period of 3 years after the completion of moratorium. Whatever the duration of moratorium that the banks have given you, based on the projected cash flows and viability assessments by the bank. What shall be the security for this scheme? The subdebt facility so sanctioned by the MLIs will have second charge of the assets financed under the existing facilities for the entire tenure of subdebt facility. So second charge on assets financed under the existing facilities. Now from the banking guidelines point of view, from the point of view of the banker, what will be the risk weightage assigned to the credit extended under the scheme? The spirit of the scheme says that cgtmse guaranteed portion to be assigned zero risk weight as per the extant guidelines, which means the 90% that is brought in as a guarantee by Government of India makes sure that there is no risk to the banks as such. And hence it has been said that the banks can assign it zero risk weight. So it should be easy for the banks actually. If you are able to convince the banks, then banks don't have much to lose. The balance 10% anyway, the promoters themselves have to bring in the margin money. I hope we have answered this question very comprehensively. See you tomorrow for the next business challenge question. Bye-bye.